All right, looks like we have a pretty good crowd of participants here. So why don't we go ahead and get started? And first of all, thanks everyone for joining us today. What we're going to discuss is based a lot off of our 2023 crypto investment outlook. The title of the call today is Crypto's Resilient Old Guard, the Strengthening Investment Case for Bitcoin and Ethereum. In that 2023 outlook, we talk about a number of the themes that are going to drive the crypto investment theses in 2023. And today we'll focus on Bitcoin and Ethereum, both how they performed throughout 2022, but also some of the things that are going on in terms of scaling and other developments that are really, in our opinion, strengthening the investment case. So with me today, our speakers are João Cunha, portfolio manager, Pedro Lapenta, head of research, Lucas Santana and Yuri, our research analysts, and I'm Gerry O'Shea, the head of global content here at Hashdex. Before we get started, if you can bear with me, I do need to read one short disclaimer. This webcast is for informational purposes only, and nothing should be considered the official opinion of Hashdex. This presentation is not an offer to buy or sell, nor is it a solicitation of an offer to buy or sell. Due to various risks and uncertainties, actual events or results and the performances of products may be substantially different from those reflected or contemplated in such forward-looking statements. For any product-specific information, please refer to the appropriate prospectuses. So with that, I'll turn things over to Pedro, our head of research here, momentarily. Let me just forward along here. Hopefully everyone can see the deck all right. I did want to give a very quick, for those on the call that might not be familiar with Hashdex, we are a global crypto asset manager founded back in 2018 and really exist to kind of bridge the gap between traditional asset management and the crypto ecosystem. And so we do this through our regulated and secure ETPs and other regulated funds. And I think maybe I won't go through the whole timeline here about our DNA, but as you can see from the slide, we have our roots in Brazil and Latin America, but more recently have expanded into Europe and the US with product offerings as well, and continue throughout the current challenges of the crypto winter to really be trusted by over about 250,000 investors globally within our product. So just a little bit of background there. I think maybe that's probably a good segue to turn things over to Pedro to talk about our discussion today and how we see things shaping with Bitcoin and Ethereum going into this new year.
Thank you, Gerry. Good morning, good afternoon to you all. Thank you for participating in our monthly call. The idea of the call today is to provide you with some color on what we saw in 2022 and what we're seeing for 2023. We recently published our crypto investment outlook. You can find it on our website. It's a comprehensive report that we put out yearly, talking about the main achievements and the main news of the crypto space in the previous year and what we're seeing for the major themes that we're seeing for the year ahead. In this year's outlook and today's presentation, we're going to give you a brief overview, a top-bottom overview of how we're seeing the markets. And then we're going to talk specifically about the two major blockchains that we think are going through, despite all the bad news and all the things that happened in 2022, they're going through rapid innovation and rapid updates that I think are going to make the case for them even stronger. On the next slide, Gerry, thank you. This is an overview of we put out in our report, and this was signed by our CEO Marcelo. But from a big picture, we had this crazy macro environment, one of the fastest shift in monetary policy and monetary tightening in the history of financial markets in 2022, and it was a global coordinated effort. Obviously took a hit in crypto, but we also had several micro events of the crypto space that also affected the industry. But in a matter of a year, a matter of a few months, we saw it. Bitcoin, for example, coming from 65, 66,000, its all-time high. More than $1 trillion in market capitalization, coming down to 70% to today, 17, 18, $20,000 per Bitcoin. A series of events that I'm going to talk about in the next slide. But we think, despite this strong price movement and despite all this macro craziness that we saw in 2022, 2022 was not a bad year for crypto in terms of fundamentals. What we argue is that it's the contrary. It's been one of the strongest years in terms of fundamentals, and that's what we wanted to bring to you guys, through this presentation today, and mainly through our report that we put out a few weeks ago. So basically, what we're seeing is, a bunch of stuff happening on the infrastructure of this technology. We think we are the early innings of a very long cycle in crypto and blockchain technology, and we're seeing a lot of improvements in terms of infrastructure that is going to help onboard the next 100 million users or more, right? We're also regulation is coming strong, we think, and several other things. But the whole message, just go back a little bit, Gerry, on the previous slide, that we wanted to convey is that a lot of things is happening on the fundamental side, and hashtags. It's important to highlight here, as a global player, we are as committed as ever to the space. We don't think the events that took place in 2022 killed the case. That's the contrary. We think it reinforces the case. The long-term goal of crypto is still there, and we made bold moves in 2022. And it's also important to highlight what we did, right? So we launched 3 ETFs in Brazil, thematic ETFs. So decentralized finance, digital culture, and alternative layer ones, right? So these are major things that you can invest in Brazil. We launched 2 ETPs in Europe with a crowd listing in several countries, so you can have access to these products in Europe. And we also took a different path in the US by listing a BTC futures ETF with a different regulation, the first 33 Act regulation in the US, that we think is going to position ourselves very strongly when markets bounce up. We think will. So, and the other point that we'd like to reinforce here is that since the foundation of hashtags, we aim to be a global player for the institutional investors, and we're pretty much obsessed over operation and risk controls, and we can say that this paid off in 2022 when we avoided exposure to all these major blowups, you name it, and we avoided it. We didn't have exposure to FTX, nor Alameda, Celsius, Voyager, Terra Luna, nothing, because we focused on strong due diligence on the players we engage with. We have severe operation and risk controls. We hire the best partners in every aspect of the business. So we saw this being reinforced and being put to work in 2022, and we think it's important for us to highlight as we are expanding globally and putting products worldwide. At the end of the day, we think risk management really matters, and that's what we offer, and transparency really matters. That's what we offer. So that's the big message from a broad perspective. And if you could go ahead, put the next slide, Gerry. And this is the piece I wrote for the outlook. It's again, we think when you stop at the end of the year to go over what happened in a very intense year, because sometimes when you're living the day by day, you miss the small things and you don't put them into perspective, and you don't see them as they really are. When you add them all up and like writing an outlook for the next year, we really were like, okay, there's a bunch of things bad that's happening in 2022, but there's a list of things that are good, right? And then when you weigh them, that's what we've been doing for the past 2-3 months. We're like, come on, guys, this is not, what's the bad news that happened in 2022 are not case killers. right? On the contrary, we think, the foundation of crypto is improving, fundamentals are improving. This thing is gonna, is getting prepared for the next 100 million users, 200, 300 million users. And that's what we saw in 2022. So that's why we are bringing this message up front, because, when you look at the news and then the short sight bias, you only remember the bad things, and especially because the last thing that happened, the bad thing that happened was FTX, which is, some sense of fraud. It got a lot of press attention, right? Because they were too public of a company, sponsoring sports teams and Formula One and supermodels and so it was a very press-oriented company, and it obviously got a lot of press, and with SBF involvement in politics and all that stuff. So, but we wanted to, do not forget that wasn't, a small issue. It was a big issue. But the good thing is that, we saw Ethereum merge. This was something that has been planning for quite some time, and it happened without a hiccup. This is a major update to the second largest blockchain, and the largest smart contract blockchain. This is no small thing. The scaling solution that was an issue on these smart contract platforms, because they had a surge in activity, and they became slow, and they priced out, small players, and it was expensive. We're seeing several scaling solutions being developed and working, right? So the issue with scaling solutions is probably behind us, right? So, and that's gonna, help onboard millions and more users. This is very, very important. Regulation, it's a third point that we think is worth mentioning, because, White House, obviously, US, the largest market in the world, is finally putting crypto and blockchain technology as its top priority. And we saw that through the White House framework that was published late in September, I think, or October. It's not the final regulation yet. There's a lot of work to be done still, and obviously it's going to have to involve everything that happened with FTX, because the framework came before. But we think the whole message was very, very important to the future of crypto technology. So this is something also that's worth pointing. We said it before. Blue chip DeFi protocol. DeFi is one of the most important use cases of crypto that has been gaining traction, and it's working. And it had its stress test year. It was put to test in 2022 with all these crashes and all these blow-ups, and they worked. It's showing their strong attributes, that that smart contracts that are auditable, that are transparent, that are independent, that are autonomous. They work during the worst times of markets, with severe activity, with prices super volatile, going up and down 10, 20, 30% in a single day. They work 24/7. So this is very, very important, because this is early stage technology, and one of its main use cases is putting to test, and it is working. So this is important to highlight. And on top of all of these aspects of related to technology, related to regulation, we saw a huge number of the largest companies in the world launching projects, studying crypto, studying blockchain technology, deploying teams. But that's my point at the beginning of the message is, okay, when we were there in July and we saw news about BlackRock, and then we look at them isolated, we said, okay, that's big news, okay, but then it goes away. But then when you add them all up, and then you say, Google, JP Morgan, Disney, Goldman Sachs, BlackRock, all these major global companies putting projects in the crypto space, and then you add them all up and say, okay, this is something happened. And when you compare to previous years, right, remember, this is still early technology. Bitcoin was invented in 2008, Ethereum 2015, but volume only picked up, 2 years ago, 3 years ago. So this is very, very early. And then when you see all these names, all these major names, getting involved in the space, and then regulation coming, you say, okay, there's something going on here. It's not only FTX, not only Celsius, it's not only the Terra Luna thing. So that's the main point that we wanted to put out, is that there's a diverse set of news that strengthened crypto fundamentals in 2022. And on the bad side, just to be very quick here, because it's all over the place, but it's monothematic. That's what we wanted to highlight. It's severe. Obviously, these people lost money. There were, FTX is probably a fraud. Terra Luna, was bad engineering, but it was not related to technology. Celsius, Voyager, and all these guys over leveraged. They're not transparent entities. But once you peel down and there's a common theme among these blowouts. They are unregulated, certified as centralized finance entities, mostly located in offshore jurisdictions with light or no regulation. That blew up because of over leverage, because they are not transparent, which is the contrary of everything that crypto and blockchain technology brings to the table, as I was just mentioning about this protocol. So that's something that's very, very important to highlight. It was not technology related, and we think regulation can fix it, and probably will. So that's the whole point, that we don't want it to get washed away with the bad news. The good news is a diverse set of news that strengthens crypto fundamentals. The bad news is monothematic, fixable, and it will be fixed. So the things are happening. That's our view, and we wanted to bring it to you upper front. Technology is intact and improving. It's not about the technology. There's a bunch of news coming, from everywhere. It's covered everywhere. So it's important to differentiate between signal and noise. And at the end of the day, we still think, the long-term goal of crypto, which I think is to have this global neutral, infrastructure that it's not only economic, but it's social as well, for the instant transfer of information and value, which is different than what we have today. We have that today, which is not neutral, but it's only for information. We're going to have to, this thing is developing an infrastructure that is going to be neutral for the transfer of information and value. So this is something big. This is really big. So that's why we wanted to convey this positive message. We're as committed as ever to crypto, and we think we're at a moment where a lot is happening, and crypto is improving. Prices are depressed, and we think it could be one of the greatest opportunities in its history. So I want to pass along now to Lucas, actually to João. I'm sorry. He's going to give his view on the macro, and then we're going to talk about a little bit of Bitcoin and Ethereum and scaling solutions with Lucas and Yuri after. Thank you all for participating. João?
All right, thank you, Pedro, and thank you all for watching us. All right, so let's start by explaining what happened, or how do we see what happened in 2022. So, but first we have to go back a little bit longer to understand that was Gerry, you can follow this slide, please. We had a very significant paradigm change due to the COVID pandemic in 2020. Before it, we had a decade of low interest rates, low inflation, and strong economic growth, especially in developed economies. And after it, what we saw was global supply chains disruptions, protectionism all around, and huge fiscal and monetary stimulus. So when we arrived in 2022, there was an extra element of in the geopolitical front, which was the war between Russia and Ukraine, and we also have new lockdowns in China. So this was the perfect environment for acceleration of inflation in developed countries, and as a consequence, the central bankers were forced to react, and basically it was a monetary tightening and interest rates raising in developed countries. So it was a very difficult year for financial assets. We had equities and bonds going down in the same year, which is a very rare event. We also had real estate and gold, and of course, crypto was dragging in this tornado, and we also had a very difficult year. So this is like the foundation for what we expect in 2023, which is a little bit different, but let's go to next slide, please. So basically, we bring in this outlook four predictions. So first is that we can expect 2023 to be a more ordinary year compared to 2022. It doesn't mean that it's going to be an ordinary year. We have some threats in the landscape. We have, let's say, China and Taiwan, for example. We still have the war in Ukraine, but it's unlikely that we will have such a different or peculiar year in 2023 as we had in 2022. The second prediction is that inflation will continue to play a very important role in risk asset prices. And we can also add the recession, so the economic activity, and they will play like a binomial role in defining asset prices. So, and it's very important to understand that it's not necessarily the direction that things are, but it's how do they compare with the prior expectation that we have. So we're expecting inflation to slow down, and probably we'll find a peak in the interest rates, and after a while, it's likely that they will go down too. So it's like the base scenario. Wherever deviates from it will impact prices. So we must be aware of these possibilities or these scenarios. The third prediction is that crypto will not decouple completely from traditional markets. It's very unlikely that we see again what we saw last year. We saw, for example, the correlation between S&P 500 and the NASDAQ crypto index going as far as 0.8, which is very high. But it's even more unlikely that we see what happened prior to the COVID, that where crypto was basically uncorrelated to all the other asset classes. So it's even more likely. So we can expect it to be something in between, let's say 0.4, 0.5. Time will tell us, but it's going to be somewhere in the middle. And let's say the fourth prophecy is that if the risk markets recover at some point in 2023, we expect crypto to run faster. Just as it happened in 2020, in the peak of the COVID crisis, in March, crypto recovered really fast. So we expect the same to happen in 2023. We saw several events that didn't impact the fundamentals, but impact the prices, as Lapenta was showing us in his presentation. And we think that crypto reacts way more faster to changes in the environment in both directions. So it was negative in 2022. We believe it's going to be positive this year if we have a recovery. So this is the main ideas that we have from the macro side, and I'll take it back to the research team. Thank you all.
Thank you, João.
I was going to just mention too, I forgot to mention up front for people, if you have questions, to please feel free to submit them throughout. We're going to try to reserve some time at the end to answer any questions, and so please feel free to submit them at any point.
Thank you. Lucas is going to talk about a little bit about the Bitcoin's investment case. There are very interesting updates and things happening on this, the major blockchain of the market, which I think is improving the investment case. It's making it stronger. It's making it have more utility in the future. It's very interesting. It's and all these things that I mentioned in my part are getting washed away. But there's FTX debacle, and we don't want this to be not paid attention by investors, which is that that's what we think is creating the opportunity, right, to invest. So Lucas, please show us very interesting findings in Bitcoin and Ethereum as well. Thank you.
Yeah, sure. Thanks, Pedro. Well, guys, it's a pleasure to be here. Thanks very much for joining us today. And I think after this top view of everything that happened in macro and the whole crypto ecosystem in 2022, what I'd like to do right now is to dive a little bit deeper into Bitcoin first and then Ethereum, to start to decouple the noise from and try to extract signal of the things that we believe are improving the investment case for the two major assets in the asset class. So first, for Bitcoin, 2022 is not news to anyone that was a bad year for prices, but for the fundamentals, and the next slide, we try to bring these fundamentals together. We saw several advancements in the Bitcoin thesis, and I think the first one, which I would like to pinpoint here, is the Lightning Network capacity, which for the first time in October of 2022 reached 5,000 BTC. This is still a small number, but one thing I'd like to stress here on the chart on the right is that over the course of 2022, even though prices were pretty depressed for Bitcoin, liquidity for people to do micropayments in a very fast and cheap way using the Lightning Network continued to grow. And it reached this milestone of 5,000 BTC, roughly $90 million at current prices for liquidity for the first time in history. This is basically showing that this new technology that is being built on top of Bitcoin is actually continuing to grow and gaining adoption by institutions and actually by retail users. And this is a good indication amidst the bear market that technology continues to evolve. The second thing, which is quite interesting as well, and is happening in 2022, is that the hash rate for Bitcoin, so the security of the network, reached new all-time highs. And this, again, is in the midst of a very bad year for prices, where Bitcoin corrected around 60% in 2022. But even though that happened, hash rate continued to grow, and we have reached new all-time highs, or the security of the network was maybe as high as ever since inception. A second point, a third point actually, which I like to bring to the discussion in the next slide, is actually, again, connected to the Lightning Network, the ability for major payment services, for instance, Cash App in the US, allowing its users to have access to Lightning as a means of payment. So you can think now that people can send and receive, maybe 2 slides back, Gerry, send Bitcoin payments through Lightning. And this is tens of millions of users now being able to use Bitcoin on a daily basis. And also the ability for people to issue other assets on the Bitcoin base layer, which was brought in April by Taro Assets, which is another major development we are tracking moving forward. The second point, in addition to the technological advancements, is institutional adoption. So we've seen in 2022 players such as Fidelity and BlackRock starting to give access to institutional clients to Bitcoin as an investment asset. And I think this is huge because, again, bear market, and these major players are giving access to institutional clients to the top cryptocurrency in the space. And the third aspect of 2022, which I think is also brings a lot of discussions to the table, is that, well, Bitcoin is the only major asset in the market today, or the largest asset in the market today that still uses proof of work. So it still uses mining and high levels of electricity to bring security to its network. And the next slide, we show just 2 examples of these commissions and government offices that are discussing the climate and energy implications of crypto assets, particularly with regards to proof of work. And this is a major development in 2022 because this was a major topic, and all governments are looking into this topic right now. And for 2023, I think 4 major things that we are looking forward to with regards to Bitcoin in the next slide is that, well, just like we saw for the Lightning Network capacity in 2022, maybe 2023, we continue to have this increase in Lightning Network capacity. And basically, this means more liquidity for more people to use Bitcoin as a means of exchange with very little fees and very fast payments. Also, maybe this year we're going to start seeing the first few assets from Taro, the Taro protocol, being released on Bitcoin. You can think, for instance, a stablecoin living on the Bitcoin base layer and being used very fast and cheaply over Lightning. And two other topics, which we are always monitoring here for Bitcoin, is that it still is the crypto asset with the best, so to speak, regulatory clarity in the space. For instance, in the US, Bitcoin continues to be considered a commodity. And a fourth point, which I find interesting, is to actually start and track Bitcoin as this sort of a system that allows you to repurpose, for instance, exceeds of oil extraction, gas flares, and also stabilize electrical grids. We've seen a small example of this happening in Christmas Eve of 2022 in Texas, where miners halted their operations for roughly 2 days to help stabilize the grid amidst very cold weather. So maybe we can start again continue to see these things happening, and actually people use proof of work as actually a system that can aid the rest of the economy whenever it's necessary. And next for Ethereum, I think 2022 again was bad for prices, but perhaps it was the most important year in Ethereum's history so far. And this is because, well, in September of last year, we've seen the merge happening. So in the next slide, we recap this event, which happened in the midst of September of last year, where Ethereum transitioned to proof of stake. So now there's no more mining on the Ethereum network. And as Pedro commented, actually it was a fantastic feat, I think, of engineering, because it happened without a hitch. And the consequences of the merge, not only now proof of stake is the consensus mechanism for Ethereum, but the decrease in energy is roughly estimated to have been around 99%. So there's pretty much a really small energy consumption to operate the Ethereum network today. And also, as another consequence of this, the operational costs are smaller to operate the Ethereum network. And this has made possible ETH, the native token of Ethereum, issuance to decrease by 87%. On the right, I show this chart where you have the horizontal yellow line showing the supply of ETH exactly at the moment of the merge, and in blue, the variation of this supply since the merge until the end of last year. As you can see, after this pretty significant decrease in issuance, we have barely seen the ETH supply increase. And actually, in the middle of November, you can see that the blue curve goes below the yellow curve, showing that at that point in time, the ETH supply was actually smaller than it was before the merge. What this means that, well, we are not having pretty high activity on the network right now. And we are still seeing with this issuance reduction for ETH, actually points in time where ETH becomes deflationary. Eventually, over time, the mid to long term, we can expect that as activity goes back as it was, for instance, in the middle of 2021 and the beginning of 2022, we can start seeing the ETH supply actually decreasing a lot. And what this means is that over time, with more adoption, more demand for ETH, and small number of ETH being issued, or even a negative number of ETH being issued, we can start seeing a positive price impact for its native token. And I think for 2023, the highlights I would like to bring, the next slide, are basically, first, on March of this year, we are expected to see Shanghai hard fork, which is the new upgrade that will allow people to unstake ETH that today cannot be withdrawn from the beacon chain where they do the validation of the network. What this means is essentially that people that today cannot, for whatever specific reason, engage with staking, they will be able because today ETH that is staked is not liquid and doesn't have an expected date to become liquid. After the Shanghai hard fork, they will be able to engage with this. So you can think of perhaps institutions that today already hold ETH. They cannot stake that ETH because it becomes illiquid. But after this hard fork, they then start to engage with this new operation on the Ethereum chain. And I think another aspect of this year, we may start seeing more scalability coming to the Ethereum chain through sharding. A third aspect is maybe we're going to start seeing scaling solutions becoming more prevalent, and we have to track how this will impact the demand for Ether over time. And I think other than this OFAC compliance on ETH, that's also a development happening right now on the Ethereum blockchain, and we have to track what's going to come out of this. I think number 5 is perhaps the most interesting thing to track this year, is that now you have this ESG-aligned blockchain, Ethereum, which is the largest smart contract platform in the space. And it also pays you, if you are a staker of ETH, it pays you a sort of crypto native risk-free rate. It's like a dividend on top of your ETH holdings. And these may start making institutional investors start seeing ETH as even more interesting asset. So I think this wraps up for Ethereum, and then I think I can throw it to Yuri.
Thank you, Lucas. Now we're gonna Yuri is gonna talk about the issue with scalability that's been on the radar of investors throughout the year. It's a very important aspect of the infrastructure. Several news on this front. As I said at the beginning, this is important because we don't, you don't build the infrastructure for 8 billion users overnight, right? So it's a step-by-step process, and the scalability issue is the important one that's been tackled in 2022. And we're seeing, solutions getting results, and it's working. So we're very optimistic on this front, and Yuri is going to explain it a little bit.
Thank you, Lapenta, and thank you all for being here today. Like Gerry has previously mentioned, I also encourage you to send us your questions in our chat. We will start our Q&A as soon as we finish our presentation. So due to time constrictions, I'll try to pick up the tempo so that we can actually have our Q&A with as much time as possible for your questions. But in line with what my colleagues have just introduced, presenting a broader view on the investment thesis in Bitcoin and Ether, I will piggyback on their trail of thought with what I believe is another very important angle that should be tackled, namely the different scaling solutions. You see, scalability is an important topic when we talk about any new technology, and crypto is just no different. Curiously enough, during this week, I have actually heard a very lucid comment on the subject, and I'd like to share it with you all. It was something around the lines of, the usual process of adoption for any innovation tends to be, number one, people with a technical knowledge on the subject, they just try it. And then slowly but surely, it migrates to the next phase, the second phase, in which, due to costs and access, what happens is that there's just a very niche opportunity for the rich people to try it. And then with greater technical developments, the barriers to use such technology get lower and the general public gets access to us. And bearing this in mind, the greater scalability is fundamental for the success and adoption of new technologies such as Bitcoin, such as the Ethereum network and crypto as a whole, precisely because it allows us to move from the second to the third stage of adoption, in which the user base becomes more broad and widespread. Gerry, please, next slide. Going into 2022, therefore, we understand why scalability was one of the hottest topics at the start of the year. If on one hand, we saw a multitude of positive points regarding that subject, the negative points were also present. Our goal right now is to explain why this should not be ignored, but also why they should not provoke an overreaction. Since 2021, the previous year, Promising alternatives to Bitcoin and Ethereum have gained popularity among investors, all of them promising greater scalability, among other points. And what we could observe, however, is that those blockchains, they were not so resilient from a security standpoint. For our investors, and from what we've learned over the past years, and like Hashtags has been preaching for so long, the commitment to risk control is absolutely necessary when it comes to crypto. And at this point, the old guard, namely Bitcoin and Ethereum, they're still head and shoulders, leaps and bounds ahead of the competition. Gerry, please, the next slide. And it is in light of that throughout 2022 that we could observe a strong maturation of the investment thesis in Bitcoin and Ether. While the two main blockchains have remained secure and operating as expected, their respective upgrades and scaling solutions, they promise to be the key factors for the wider use of their network in as soon as 2023 and so on. With regards to Bitcoin, like mentioned by Lucas, solutions such as the Lightning Network and Taru will allow the network to be used in a faster and more creative manner, making use of stablecoins in its ecosystem, for example, and that will only strengthen the investment case for the native asset in that chain, BTC namely. And with Ethereum, we highlight the so-called rollups, which are second layer solutions that allow a set of transactions to be registered and processed in a less costly way for the network, while also providing more security. They don't compromise the security part, much like the previous solutions did as far as alternative layer ones. We've seen that be a very hot topic for last year, but what we see right now is a trend in which Ethereum, with these rollups, it will allow much greater scalability without compromising the security part. In particular, we have the zero knowledge rollups being particularly interesting due to their usage of cryptographic proofs to allow the processing of these transactions without sharing sensitive information. So we have a lot in our plates as far as Bitcoin and Ethereum that should give us a lot of hope for 2023. And in this context, updates such as the merge, as well as the emergence of rollups, these are just some of the factors that encourage us to believe that we're seeing right now a maturing and greater robustness of the investment thesis in Ether and as well in Bitcoin.
Thank you, Yuri. And with that, I'll just make some last comments just to wrap up what we've been talking about throughout the outlook for 2023 that we published. There are other themes that we're going to cover probably in the next monthly call, but we encourage you to download the PDF and read it. And we try to make it a shorter version instead of these large documents, but there's a lot to digest there, and we're very optimistic. But the main message here again is just 2022 was an intense year, as you all saw and lived and felt it, right? So, but again, the bad things are fixable, and they're going to be fixed, and they're not related to technology. And the technology on the other side of the equation is intact and improving, as we saw. And this is happening on the two major blockchains. There are obviously a lot of stuff happening in other protocols and other alternative blockchains, but we're talking about here Bitcoin and Ethereum, which are the safest within the crypto space and the largest and the most liquid. So we think we might be at a point, obviously these are life-changing technologies as we see. And I don't know what's going to happen next month or next quarter, or even next next semester. But if you look at it, from a long-term perspective, we might be in front of a major opportunity, because I see, the encounter of three massive forces in the coming months, because we're talking about potentially a macro stabilization or even reversal in liquidity conditions coming up in the next 6 months, potentially. That's gonna encounter crypto with improving fundamentals. That's the argument that we're making, because the bad projects are being wiped out, they're being cleaned. The good projects are getting stronger. The largest blockchains are getting stronger, right? With tremendously depressed prices. So this is something that is rare, right? So there are three major forces, and we think it gets even better, because you don't have to go down the risk spectrum within crypto to alternative coins, and you can go to Bitcoin and Ethereum, and you'll be fine, because there's decent upside, expected return in our opinion, with these three major forces behind it. So that's the case that we're trying to make here, and we're not downplaying. That's the message. We're not downplaying what happened in 2002. It requires people to fix it. It requires regulation, but we think it's going to happen. And there's tons and tons of investment. In 2022, it was record venture capital investment in crypto. We're going to see the next cycle of new products, new solutions, new wallets, new whatever coming up, and it's going to help onboard millions and hundreds of millions of users, we think, because this is a global technology, this is a global solution, and we're seeing the adoption, right? So that's what we're reinforcing. What the largest companies in the world are working with. JP Morgan has a department of 300 people working, every single day to understand the technology. How can they use that every single day? And this is demand for block space. This is demand for dApps. This is demand that is being built, behind the scenes, that we're going to see come to fruition in the next 2 to 3, 4 years. And then at the same time, you have all these three forces. So that's the big message that we're trying to convey here. And we hope you enjoyed our conversation, and I think we can open up for questions, Gerry. We already have one here, but thank you all for participating.
Yep, thanks, Pedro. And we've got a handful of questions. I think the first one maybe is directed at João Marco, but others feel free to chime in. But the question is around kind of the recent events, so FTX and some of the events around Genesis and Gemini. How could these events impact the ability of crypto markets to recover alongside other risk-on assets? So I don't know, João Marco, if you want to take a stab at that one, and if others have thoughts on the question, feel free to chime in.
Yeah, it's a very good question. The events that we saw in 2022, when you take a look at the charts, they do not change the trends or the overall trend of the market. They look like a step in the graph. So they change the level, but not the trend. So I think if we start to move to a good market scenario, in case one of these events happen, what we'll see is that we'll have a drop in the prices momentaneously, but the overall trend does not change at all. So I don't think that these events would be strong enough to revert a positive trend if the markets get hot again.
Yeah, completely agree, João. And I would just add that, if we compare the major events of 2022, you look at, the first one that triggered most of this mess was the Terra Luna. The impact of Terra Luna was much higher, measured by billions of dollars of market cap that got destroyed, right? And then you have the aftermath of Terra Luna and the consequences on 38C, on Celsius, on Voyager, and all these other centralized finance players. But then when you come to FTX, FTX, as I mentioned, was a very public, press-oriented company with sponsorships, and it got a lot of attention. But the market didn't react as bad as it happened in the previous blowups, right? So what we can say is that the digestion, of this issue has been easier and easier and easier, and everyone is following this issue. So it's all over the place. You can, it's not that it's getting people by surprise. So we're living it through. We're seeing the Genesis, the DCG discussion live, as their chiefs or exchanging letters publicly, and we're following, step by step, but judging from the market reaction, it's getting less and less and less intense. And then you can see in December and January, actually, crypto is up, Bitcoin's up, Ethereum is up, alternative coins are up. December, they were stable, and the volatility of Bitcoin, for instance, is kind of lower than the S&P, something that, is very rare. So there are some signs here that show that, the market is getting mature about these issues, and these issues are not so strong as the ones that came before war. So that's something that we're paying attention to.
There's got a couple other questions here in our last 5 minutes or so, but the one question, and actually this is kind of a combination of two questions, I think, is for Lucas around so Ethereum's merge and the shift to proof of stake from proof of work. There was a question about whether eventually Bitcoin will do the same thing. So maybe just an opportunity to kind of talk about the difference in those consensus mechanisms, and then another question around what the Ethereum shift to proof of stake has done or will do in terms of how institutions view Ether as an investment.
Yeah, sure. I think for the first one, so as far as we know, Bitcoin developers, they have no intent to move Bitcoin to proof of stake. And actually, I think the strategy is quite different, not on the development side, but actually on the mining and all the infrastructure that is already put into place to make Bitcoin work. So I would say that, yes, today, Ethereum consumes a lot less energy than it used to consume in the past. And the change to proof of stake was actually expected to happen since very early. Even if you read the Ethereum white paper, they had the intention to move to proof of stake eventually, but they didn't have the technology there yet. And it took them like 7 years to have this done. And when it was all set and ready to go, they didn't transition. For Bitcoin, I think there's a completely different story there. And what I tried to stress, and I think that's something we should keep an eye on, is that even though they are not reducing energy consumption, they're actually trying, miners today, they will operate better whatever there is cheap electricity. And that's why you can always see people talking about Bitcoin miners moving to places where you have electricity exceeds, and then they can repurpose this energy to mine Bitcoin, monetize this energy. I think this is a general trend that we can continue to see. And actually this electricity, this energy would basically be lost. And these guys are starting to repurpose this to generate a very strong and robust network on top of this asset Bitcoin. I think that maybe gives a glimpse on the first question. And for the second question, I think one thing I commented is that now if you are an ETH investor, let's say you are an institutional investor and you hold ETH, then eventually and even when we start seeing withdrawals being activated in March of this year, you're going to have this maybe more interest from these guys to start staking. And as I said, if you stake, you're going to be participating in the operation of the Ethereum network. And as a result, you're going to earn rewards in terms of issuance and network fees, which effectively means that ETH you deposit earns you a yield annually. And this is what I call this crypto native risk-free rate, where now you get paid by holding ETH and participating in providing security to the network.
That's great. I think we have a couple minutes left, so maybe we'll leave it at, there's one question that I think is actually a pretty good segue into what we'll focus on for our next institutional call next month, but it's around particular sectors within the NASDAQ crypto index. And the question is, are there any particular sectors that you believe should outperform the NASDAQ crypto index in 2023? And I don't know, Pedro, maybe you want to take a stab at that in the last 2 minutes here.
Yeah, thank you, Gerry. Well, first of all, the NCI benchmark, we have to look at how it is constituted today. And there's and remember, this is a market cap weighted index. So it has its list of tokens, you know, given the requirements that we use, and then it weights by market cap, and it's very concentrated today in Bitcoin and Ethereum, and it's called, we should call it the blue chip index, right? So that would be the S&P 500 of crypto. So that would be the NCI, which is the index that the hash 11 in Brazil, for instance, follows, and in other markets as well. So the point is that this is highly concentrated on Bitcoin and Ethereum, and that's what we've talked about, that these old guard blockchains are getting better and they're getting stronger, you know, surviving all this crypto mess and updating and being having more utility as well. But again, once we move, and we think these two are probably with different investment thesis. Obviously, Bitcoin's a different investment thesis than Ethereum, but these two are the safer within crypto. But given that, you know, obviously we have DeFi, and it adds layers of complexity and other risks, but they've been, you know, hit a lot as well. Even, you know, you go to our thematic products in Brazil, for instance, it might not be available yet in other markets, but we're working on it. But you know, we have the DeFi exposure, we have the digital culture exposure, even the alternative layer 1 exposures, and all these verticals, they've been hit even more than Ethereum and Bitcoin, and they might, you know, they have more beta in terms of like market linguajar, how do you say it? Market, you know, language. So if Bitcoin and Ethereum, which make up, you know, most of NCI, do well, probably these other sectors are going to follow, and given their higher beta, they're going to probably do a little better. But that's the argument that we were making before. You don't have to go to these cases, because there's, you know, additional layers of complexity and risk. The expected return of Bitcoin and Ethereum itself should suffice, you know, in our opinion, and at this point of the cycle.
Thanks, Pedro. And I know we're at time here, and those themes that Pedro was talking about, we'll explore in our next call, as I mentioned. But I did want to just again mention that if you'd like to download our 2023 crypto investment outlook, it's available on our website. And thanks everyone again for taking the time to join us today, and Happy New Year to everyone. Take care.